We've been talking for years about the crypto industry going mainstream. And I think a lot of people talk past each other when they're talking about that. Do they mean people accepting Bitcoin for payments? Or do they mean using Solana? Which blockchain are we talking about? Oftentimes, we're missing the point when we're talking about those specific tokens and blockchains. What really matters is, do businesses want to use the blockchain to make payments? Is it more efficient than the payment methods that they're currently using? And is there a path forward to actually cause disruption to the traditional financial ecosystem? And I think we're seeing that that absolutely exists today. Coinbase is at the center of this. Specifically, they're making stablecoin payments, whether you're talking about the USDC token, Tether, PayPal's stablecoin. Coinbase is making the infrastructure possible to make payments possible. And it isn't until those institutions, those companies that we actually interact with for financial transactions, the Squares, the PayPals, the Apple wallets, until those companies start to allow the crypto rails to be the way that payments are transacted, we're still going to use the same methods that we've been using: ACH, debit cards, credit cards. But there's signs that there's a lot of growth in stablecoin transactions. And these companies that are actually the ones that you interact with and the ones that businesses interact with are starting to take this very seriously. So I want to highlight something that Coinbase recently highlighted, and I want to put that financial impact into context. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video's sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's get to a recent blog post from Coinbase. And what this one covers is PayPal, Ernst & Young, and Google Cloud using Coinbase for B2B payments. The reason that I think this is really notable is that these are the kind of companies, is if you're going to make payments from a business to another business with the blockchain, then it's going to be much more likely that that infrastructure is going to be capable to taking retail transactions. So what they say is that more Fortune 500 companies are partnering with Coinbase to explore crypto payments. I think we're still in this exploratory phase. Yes, we're starting to see some real commercial operations, but we're still, how is this going to work? What is the back end going to look like? Is it going to be reliable? These are still the questions that all these companies are trying to answer. And so what they said is that PayPal announced that it successfully paid an Ernst & Young invoice using PayPal USD, their stablecoin. So basically they want to get into the stablecoin business and deposit it into Ernst & Young's Coinbase Prime account. This is Coinbase becoming the equivalent of a bank for crypto transactions. This transaction used the digital currency hub from SAP, and they were executed from PayPal's SAP ERP. This may sound a little bit complicated, but basically what this means is the internal systems that PayPal is using to actually pay its bills, which would normally write a check, send a wire transfer. They are now capable of moving that money through stablecoin transfers. And so that's the way that this bill in particular was paid. And as they say here, Google and others have started using this same kind of crypto transaction to make their transactions. What role does Coinbase play in this? Well, this that we're talking about right now is their Prime solutions. This is basically, Prime is going to be more of a terminology that we would use in something like a brokerage account, which is kind of what they're acting as here. But in this case, it's more like a bank. But they also have commerce solutions and exchange. This is where you would be moving tokens from one token to another on this exchange. So maybe one company wants to pay with the PayPal USD, another company only accepts USDC. You can make that transfer on the exchange. And that all is going to happen in the background. That's where the infrastructure piece that Coinbase has been building for years is really going to come into play. All these good things are going to happen, and they're basically going to be invisible. Somebody's just going to pay their payment with their normal ERP or enterprise resource planning system, and that money's going to go to somebody else's Coinbase Prime account, just exactly the way that it would in a typical transaction. But it's going to be more seamless, more decentralized, and in theory will be much lower cost as well, even if you're transferring from one currency to another. And this is getting to be a really big business for Coinbase. I want to just go through where most of the money is made for Coinbase, and that is with the USDC token. Right here is CoinMarketCap, and this is showing the market cap of the USDC token. The reason that this is important is there are assets backing the USDC token, and those assets are invested in things like treasuries, into savings accounts. So they're going to be generating yield over time. So there's two ways that Coinbase and the USDC token can make more money off of stablecoins. One is going to be the market cap of the USDC token getting bigger. The other thing is interest rates going up. Obviously, we know that interest rates are declining right now, at least those short-term rates. But if you look at the size of the USDC token, it is getting larger. Between the end of March, which is when second quarter would have started, and the end of June, you get an average market cap of right around $32, $33 billion. Right now, we're more in the $35, $36 billion range for the USDC token. So you're going to see 7, 8, 9% growth in the size of the USDC token. Now, there is going to be a slight decline, at least later in this quarter here, on the rate the treasuries would have paid over that period of time. So this number, the stablecoin revenue the Coinbase is generating, may not increase in the third quarter, but it probably isn't going to go down much either. It'll probably be relatively constant. And this is a trailing 12-month number, but just incredible that they're making $782 million on an annual basis just from their ownership in the USDC token. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. The reason all this is so important today is the institutions that users and businesses are going to interact with are going to be really critical to cryptocurrencies and stablecoins being a bigger piece of our financial future. If PayPal and Square and SAP and all of these back-end terminals don't build the tools that we need to actually make payments and pay invoices with stablecoins, then adoption is not going to increase. But if they are building these tools and they are testing them and things are going well and they're able to lower their own costs, remember, that's their benefit. What they want to have is lower transaction costs. They don't want to be paying ACH fees and wire transfer fees for every single invoice that they're paying. They don't want to pay credit card bills. And for some of these companies, especially companies that are taking retail payments, credit cards are an enormous fee that they're paying every single day. So there is an incentive for all these companies to explore the blockchain, to explore stablecoins. If all this exploration leads to products being launched, then that's what's going to ultimately drive growth in the industry. Coinbase is building the infrastructure underneath. They're building those Prime accounts. They're building the wallets as a service. There's a bunch of different ways that Coinbase is going to benefit. The main one financially right now is going to be through stablecoins, but I think this is going to be a place where their tentacles are going to be all over the blockchain, and this disruption in payments and the way that we view assets in the future in a digital world. So again, this is just another sign of maturity of the industry, of the blockchain, and of Coinbase's business. So love what I'm seeing here from Coinbase. And I'll be covering this more when they do release their third quarter earnings results. So come back here for that. Let me know what you think of Coinbase's progress over the past year. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.